Hello, everyone, and welcome to the Impact webinar charting the next era of MENA hydrogen race to global top. My name is Molly Huan, Head of Content at Leader Associates, and I'm thrilled to be your host for today's session. The time to deliver the hydrogen economy is now. From the Middle East to North Africa, we've seen a wave of innovations. The MENA region is really leading the charge in turning ambitious visions into tangible results. But the critical question remains: how can we effectively deliver? To answer this one, here are the three themes I want to emphasize: low-cost supply, long-term offtake, and more project FIDs. In today's session, we'll dive into how MENA drive these goals through innovative approaches, smart partnerships, and a clear view for the future. Today's agenda will cover everything from market trends to demand drivers. This includes green steel, clean mobility, low carbon fuels, and the law of partnerships. We're honored to have industry leaders from Mackenzie, Vulcan Green Energy, Liquide, H2 Global, and HIF Global to guide us through these discussions. For our audience, your voice matters, so please feel free to submit your questions at any time. We'll pursue as many as possible. Before we get everything started, please note that this webinar also marks the global launch of our in-person event, Connecting Hydrogen MENA 2025 as the region's most significant hydrogen gathering, taking place from February the 24th to 26th, 2025. With this, we aim to unite the entire hydrogen value chain to accelerate progress, production, and exports. And now, without further ado, let's welcome our first speaker, Ms. Claude Mourey, Head of Hydrogen and Low Carbon Fuels for EMEA at Mackenzie, to help set the context. Ms. Claude, the screen is all yours.
Thank you very much. Thank you very much, Molly. Thank you very much to all who are joining us. It's my pleasure to be with you today. I'm going to share my screen. Do you see my screen?
Yes, perfectly.
So it will be, so as Molly mentioned, I'm working for Mackenzie. We are a company who is specialized in business intelligence, and we have also a consulting division. I'm a director for the hydrogen and low carbon fuel based out of Dubai. Pleasure to be here with you. Today, I'm going to discuss, set the scene through three key sections. The first one will be looking at the global market overview and trends. Second one will be looking at the MENA region in more specificity. And then I would like to finish with sharing with you what we believe are interesting in the short term to look at. First of all, an overview of the global market overview and trends. So our Land Hydrogen database now counts 1,749 projects, but globally, new project announcements are slowing down. There is around 0.6 million tonnes per annum of capacity who took FID in Q3 2024, which is a welcome upswing after a sluggish first semester. This was also accompanied by many high-profile cancellations, providing early signs that the market is maturing as developers become more decisive on investments. Current total project capacity announcement is about 136 million tonnes per annum, out of which 111 million tonnes for green projects and 25 million tonnes for blue projects. The growing demand from the traditional end-use sector is enabling faster project development, and securing off-taker remains the greatest impediment to final investment decision. The project having the most success in this regard are those supplying into the conventional end-use sector, as you can see on this chart, and in-house green hydrogen production at refineries is gathering pace, and the emergence of low-carbon ammonia buyers offers demand-side scale. Upcoming support scheme in Japan and South Korea will catalyze deals targeting ammonia into power application. Something to watch for. I'll come back to that. Over 2 gigawatts of green hydrogen capacity have reached FID, including the Giga project in India of 1.3 gigawatt. But for the most part, FID have been constrained to a handful of markets, offering the most robust policy support. There are now 463 low carbon hydrogen projects that are under construction or operational globally, for a total capacity of 5.8 million tonnes per annum, of which 134 are under construction for a capacity of 4.7 million tonnes, and 330 already operational, representing just 1 million tonnes per annum. While it's not obvious from the chart, But much of the blue capacity in the post-FID low carbon hydrogen capacity comes from retrofit projects. So actually, many existing gray facilities in North America are retrofitting low capture CCS capabilities to their plant. Speaking a little bit about MENA, there is just above 100 announced projects in the MENA region, but out which only 9 have taken FID for a total volume of about 0.7 million tons per annum. And this is split roughly 2/3 blue, 1/3 green. It's interesting to note that MENA projects they only represent 2% in terms of number of projects that have taken FID, but they correspond to 11% of the project capacity. So it's behind North America, which actually represents 45%, and Eastern Asia, 20%, but it's ahead of Western Europe, which capacity has taken FID is only 10%. This displays the scale of the project in the MENA region and the fact that the region is pushing ahead despite a lack of formalized incentive mechanism. Now, looking at the offtake agreement and what can we understand, what does it take us? What does it signal? What happened this quarter? So first, the sales purchase agreement contracts are mainly driven by the traditional end-use sector of hydrogen and derivative, so industry, fertilizer. Blue seems to be the color which prevails, especially in the sales purchase agreement. But green is clearly present, and the diversity of agreement along the maturity stage, as you can see, is a good sign, and the breadth of interest in low carbon hydrogen and ammonia. Looking at the deals and the fact that merger and acquisition have become more frequent, which is adding a further dynamic in the market. Projects are reaching their final stage of development and their economics have now become clearer. So developers have been opening the doors for market participants to acquire stakes. This acquisition have been injecting capital in advanced projects, but have also provided offtake opportunities. So here, 4 examples. First, Brookfield Asset Management, who is looking to invest $200 million in the e-fuel project developer Infinium and its project Roadrunner, which is under development in West Texas. Knowing that Brookfield said that they might invest up to further $850 million to support other projects from being developed by Infinium. And this investment is the first in the ESAF space of Brookfield coming from its global transition fund. The project has secure offtake from American Airlines, which is most likely a critical enabler. The project is set to convert an existing gas to liquid facility and utilize ExxonMobil's Denbury assets to source and transport dioxide carbon. So e-fuel projects are capital intensive, and securing the first $200 million for Roadrunner allows Infinium to attract further investment. Hitting the pre-agreed milestone will most likely open up for larger investment. Second deal, which is very important, is ANOC investing in Baytown and taking 35% stake in the ExxonMobil Baytown Blue Hydrogen project, which is expected to be the world's largest blue facility upon completion. The acquisition by ANOC has been followed by another equity participation announcement with Mitsubishi also joining the project and potentially buying volumes from the project in cooperation with Idemsu, who just announced yesterday its intention to take also a position in Baytown with a view to potentially securing offtake. So what does this deal help us to understand in terms of what is going? So first, ANOC doubles its net production to 0.6 million tons per annum, moving closer to its target to capture 5% of global supply by 2030. Second, despite the grants awarded by the project by the Department of Energy, as well as competitive project economics, the project is require large capex commitment, and the ANOC acquisition is going to inject extra capital who will support it towards FID. Mitsubishi and Idemitsu continue to build equity, and there is also a range, building a range of supply options for low carbon ammonia. The addition of Mitsubishi and Idemitsu also look at not additional capital, but potential of taker, which we know is extremely important. So all in all, we believe that the project is on track to be a primary supplier of existing US Gulf Coast demand and for export to Northeast Asia market. Talking about OCI ammonia and methanol asset sales, OCI is going to sell its entire methanol business to Metanex in a deal worth about $2 billion. The transaction is due to close the first half next year. This is following previous announcement, divestiture in IFCO, Fertiglobe, and OCI Beaumont Blue Ammonia facility that was sold to Woodside. The proceeds will be used to reduce debt and return capital to shareholders. So our analysis behind these deals is from the sell side that OCI has identified assets as decarbonization vehicles for oil and gas companies which aim to boost and it aims to boost shareholder returns. Something which is important is that OCI will keep maintaining exposure in the methanol market because it's taking a 13% stake in Methanex. From the buy side, regarding Woodside, it's make Woodside acquiring a low-cost asset, which we believe are hitting the 10% IR and 10-year payback period requirement for its new energy investment. And for Methanex, it allows Methanex to acquire a large production plant, but there is also in part of the deal an ammonia plant in Beaumont, Texas, which ultimately could lead to further pathway into a diverse portfolio for Methanex. Last but not least, Total will acquire a stake in the Orange Wind project. So 50% stake in the RWE, about 800 megawatt Orange Wind offshore wind project, which is planned in the Dutch North Sea. Total is planning to dedicate its share of the electricity generation to power 350 megawatt of electrolyzer capacity to produce renewable hydrogen to feed into its North European refineries. It's not clear how many other green hydrogen projects will be powered by the Orange Wind farm, the rest of the capacity. I wanted to share with you a few selected quotes from a key player CEO, because we believe it's providing a good snapshot of the market dynamic overall. And the key word is focus. It's focus on captive demand, focus on the most promising projects, focus on key demand centers, and also focus on getting clarity on the rules of the game and how the incentives are working. Moving on to MENA, which is a region with high potential and ambitious targets. So this is from our land hydrogen platform. So on the right, some of you will notice that while Europe is leading in terms of announced capacity and market maturity in terms of policies and subsidies with clear target, actually Europe falls behind when dealing with capacity which has taken FID. So this was the beginning of our presentation. Now, Africa comes second with 16%, and this capacity announcement are driven by mega project announcement in Egypt and Mauritania. So we can look at the bubble size on the map. So it's interesting to see that if we add the 5% of the Middle East region and the 16% of the African region, the combined region leads in terms of project announced capacity volumes. So that's interesting. However, there is one important point which is worth mentioning, that there will only be so much export demand. And since so many countries, especially many in the MENA region, want to cater to this import market, there is a risk that projects might be late to the party if projects start taking too long to develop. Because the domestic market offtake is limited in many MENA countries. So this could be a real challenge for project developers who could struggle to find off-taker. Looking at the project in more detail. So North African countries have high ambition for green hydrogen development, and they rely on strong resource potential as well as their proximity to Europe and existing infrastructure, which could be used as an advantage to tap into the expected European hydrogen demand. So we can see that Egypt takes the lead of the entire MENA region, both in terms of number of planned projects, but planned capacity. However, 18 of these, which are representing 6.5 million tons, are remaining at the announced stage. Morocco is the next major country, notably due to the abundant wind resource that allows for higher electricity capacity factor due to a combined wind solar power source. Algeria and Tunisia have ambitious hydrogen development target and can use existing gas pipeline, but very few projects have been announced so far. Both markets remain quite focused on natural gas export to the European Union. The Middle East has begun its energy transition journey. Countries are drafting vision and policies that vary greatly in scope and objectives, and for most of them, low carbon hydrogen is the cornerstone of their energy strategy. We know that blue hydrogen is a natural good fit for the Middle East due to the low-cost natural gas and coupled with dioxide carbon storage capacity. However, gas availability is limited as domestic demand and LNG contracts will take precedent over blue hydrogen. The Middle East is also well suited for green hydrogen, and the region sits in the top echelon for solar irradiance, and the share of renewables in the power sector is growing steadily. Overall, the list of announced projects positions the Middle East and North Africa as a major player in low-carbon ammonia, but uncertainty still remains around actual completion dates. In the region, ANOC, OQ are leading the way with numerous projects, agreements, and partnerships, while Saudi Aramco has demonstrated its supply network back in late 2020 with the first blue ammonia shipment to Japan. There is an important element, which is a gap between the MENA national oil company target versus announced project that can be interpreted several ways, but commitment to diversification and energy transition will be driving capital allocation. So several national companies are developing yet to be disclosed projects and are awaiting policy clarifications as well as off-taker readiness before announcing these projects. However, despite this, Saudi Aramco is expected to leverage non-associated gas production from the Jafra field, and its recently 50% stake acquisition of the Air Product Quadra Blue Hydrogen Industrial Gas Company demonstrates its interest to build a blue hydrogen portfolio. We'll be watching for undisclosed blue capacities out of the Saudi Arabia, bidding into this Japanese and South Korean auction. Algeria has a set of targets of 1 million per annum of hydrogen per year by 2030. However, our database currently indicates only one project of 50 megawatt green hydrogen announced by Sonatrach. Case of ANOC is interesting. There is a target of 0.4 million tons per annum to cover refining demand, but combined with its volume from its subsidiary Fertiglobe, the announced capacity, it exceeds the target. And CAFCO has taken FID on a bigger project, but the overarching target has not been disclosed yet. So moving to the last section, which is going to cover the outlook. Supply projection per hydrogen color. What we believe here at Wood Mackenzie is that gray production is going to be will remain relatively flat over the next 10 years. And apart from Europe, where there is an absence of near-term decarbonization incentive, which mirrors the lack of pressure to transform the energy system, which is making end users unwilling to pay the green premium attached to low-carbon hydrogen. So in Europe, strong policy will stimulate demand, but this will not be enough to drive a decrease in global gray hydrogen supply until post-2040. For brown, China will continue to lead brown hydrogen supply, mainly to generate ammonia and methanol. Supply will remain flat until the mid-30s, when start of implementing carbon capture technology and deployment will start lowering it. For green, we don't believe giga-scale green hydrogen projects are going to materialize until post-2030, and these large projects are facing delays and economy of scale that are not being realized and as quickly as expected. However, green hydrogen is expected to account for 3/4 of the total low carbon supply by 2050. For blue, the US Gulf Coast is likely to emerge as a key hub for blue hydrogen production, with large and high-profile projects continuing to progress. But the Middle East offers upside risk to the long-term outlook, with national companies in the region exploring a number of opportunities and having of course, the mean to accelerate. Other low carbon hydrogen. So currently, we regroup production technologies such as methane pyrolysis, gasification, or the production of naturally occurring hydrogen. We currently don't foresee this to take a large part, but this might change in the next coming decade should naturally occurring hydrogen projects prove resource and commerciality. I'm going to speak about it a little bit more because it's playing quite an important role for the MENA region. So for example, last month, the Europe leading hydrogen company Helios Aragon, together with the Singapore-based multinational energy Rex International Holding, has announced the signing of a joint partnership to explore for natural hydrogen in the Sultanate of Oman. So Oman, the peridotite rocks found in the samayl-ophiolite are thought to be an abundant source of natural hydrogen and often found seeping through springs and water pools. So this initiative is just the latest in a succession of nascent studies and underscore Oman's significance as a potential powerhouse of natural hydrogen. Other international players are also seeking to unlock Oman natural hydrogen potential. For example, the US geotechnical firm Eden Geopower in September 23, we've found from the US Department of Energy signed an agreement with Oman's Ministry of Energy and Minerals to study also a natural hydrogen. And in Morocco, I think it's interesting to mention the iAfrica project, which is a sampling for natural hydrogen. So natural hydrogen, the disruptive potential is all about, imagine if the major low carbon hydrogen import market could produce themselves the hydrogen out of the ground. Imagine if the hydrogen infrastructure development doesn't need to be so large. So ultimately, exploring and exploiting resources close to infrastructure and demand market is the ideal model. But there is a catch, and the catch is mainly due to the complexity of the fact that natural occurring hydrogen process is not fully understood yet. And we need to start looking for it, and which means drilling for it. And to drill for it, we need to have a bidding round organized, and the regulation needs to be in place to be able to organize bidding round. And I would like to finish with key four, I would say, themes or elements to watch in the short term. So first, the announced project from the MENA region from the national company, which could actually be quite. What we believe is that the South Korean and Japanese auction will potentially reveal details on several blue ammonia projects that have not been publicly announced from MENA NOC region. We were also surprised by the European Hydrogen Bank auction results that revealed a number of projects that were never previously publicly disclosed. Second, the fact that the Chinese electrolyzer and the fact that they can provide up to 45% cost savings for total installed cost in the near term, together with comparable performance and the ability to meet European quality standards, could prove quite, I would say, an element of reinforcing the MENA advantage, especially since the European Hydrogen Bank auction has been now limiting the sourcing to 25% on the Chinese electrolyzer. Third, and it might be a little bit technical for people who are not accustomed with the US policy, but the Chevron deference has been actually overruled. And what does this mean? It means that before it was the introduction of the Chevron deference doctrine authorized the interpretation of ambiguities in law and regulation, as by contrast, only by the agency tasked with implementing this law. Now it's been overruled, which means that it can create a lot of litigation. And this litigation could be the opportunity for further delay in the North American market that could benefit to the MENA region. And last but not least, South Korea clean power bidding, which is attracting a lot of interest from export-oriented market, especially from the Middle East and US developer. And here, what we think is that despite the inclusion of non-price element, the cost will play a key role in terms of who will be getting this auction. So watch for this auction because it will be providing the first price signals for low carbon ammonia into the Northeast Asian market. Also potentially if there are some very competitive green ammonia projects that could get also close. And thank you very much for your attention. I believe I'm pretty much on time. Do you have any question?
Thank you, Ms. Claude, for your very insightful sharing. I think it's a very comprehensive presentation slides, and we've got some very interesting questions from the audience, around like 5. But for now, I have to put you in a stop because the time is tickling, and we will return to you during the speaker engagement session. Here are some questions, perhaps for your reference first. For example, are you seeing a recalibration in low carbon hydrogen commitment from all the industries or just IOCs? Or where do you see the demand, the near-term demand is coming from, like from the local market or from the international market? Also, we would be talking about European offtake, the decrease of European offtake and its potential impact for the MENA region as the supplier. Also, a bit more question regarding the Chinese electrolyzers, and we hope that you can stay and share with us later.
Okay, no problem. Thank you very much.
Thank you. We'll talk later. And now, please join me to welcome our next speaker, Mr. Siddharth Malik, Chief Executive Officer of Vulcan Green Energy, who will take us into the world of green steel.
Hi, Molly. I hope I'm audible.
Yes.
Great. Well, thank you very much. And I think I would need to share my screen. Great. Well, Molly and team, thank you very much. My special gratitude for the organizers for having us participate in this prestigious event. And great to hear that Claude is, of course, set a very interesting platform for us to take here on. And I think we're looking forward to the wonderful interactive sessions with all your audience and participants as well. Happy to discuss a few thoughts around one of the most crucial elements which exists in all our lives, and that is iron and steel. And I'm happy to do a deep dive into what Vulcan Green Energy is all about. We'll be part of a $25 billion diversified industrial group out of India, which has interests across mining, renewable energy, power, steel, and of course, a few other businesses which are of strategic investments to us. I thought, as I looked at your title, I thought we could probably take a few minutes to just walk through what the relevance of steel as a sector in all our lives is, how it offers a very interesting energy transition path to the global industry, both posing exciting challenges as well as opportunities to be able to hit our net zero goals. Last but not the least, I'd like to focus a bit on what those levers look like that would take us through decarbonization of iron and steel, and how low carbon hydrogen has a major role to play. At the same time, what global policies are driving these, and what sort of the way forward do we actually see? So without any ado, it needs no introduction, but steel is an inherent part of all our lives, with a market size of almost touching more than $2 trillion, and expected to, of course, touch $3 trillion towards 2030. It comes in various shapes and forms. It's a global industry, unfortunately also responsible for a significant, almost more than 10% of global emissions. And that, I think, is an interesting, not only a data point, but also it creates an interesting opportunity onto how one can look at this industry and pave the way in setting a benchmark for what is traditionally known as hard to abate sectors. And I'm glad to share that that's not so hard anymore. And it is transitioning out of that category of hard to abate, simply because the kind of innovation that we're seeing, the kind of techno-commercial that are evolving on almost every quarter, and what kind of developments we are seeing in this industry as well. As the global GDP grows, developing to developed economy transitions happen. Steel, of course, very closely mirrors global GDP growth, and we will see that this size, as I said, is expected to almost touch $3 trillion towards 2030 to 33. By the very nature of its size, this global production happens all across the world, with China leading the pack, and followed by US, India, and a few other countries. Traditionally, the traditional approach of making steel has been dominated by what is called the blast furnace route, which I'll get to in a minute. And what that does is generates a lot of emissions, right? So if you look at from the overall global greenhouse gas emission footprint, China, as I said, has a significant share there, followed by US and India. And the share of iron and steel industry in that footprint is, as I said, ranges anywhere from up to 8 to 10% today, and is expected to grow as both the global GDP accelerates, as well as the iron and steel industry follows that growth path. So it becomes imperative to address this issue of how does one start making clean metallics, cleaner iron, cleaner steel, because this is a problem that's not static. This is an issue that will evolve as we see this growth happening. The steel industry value chain has been able to allocate the emission footprint across scope 1, scope 2, and scope 3. And of course, the iron making, which is basically the process of taking iron ore and reducing it and processing it to get what is called iron, has a significant share, right? Almost up to 45 to 50%. And then when you look at how do you transfer that iron into steel using electric arc furnaces, which are largely driven by grid electricity, which of course has a fairly high emission intensity in most parts of the world, that forms the second bit. And then the third bit is all the downstreaming and the finishing and the downstreaming transport and what is called scope 3 for the downstream, right? One notable point is as electric arc furnace technology is also rapidly evolving, it promises a very interesting transition path to be able to start using scrap, especially applicable for developed economies, and using the power of renewable electricity to power the electric arc furnaces to achieve a significant, almost up to 50% reduction in carbon emissions by 2050. US is a classic example with more than 70% capacity being driven by EAFs. And that is an interesting market trend we're all waiting for. So some basics around iron and steel 101, primary routes for steel manufacturing includes these three. One is what is called the classic blast furnace route, which has some fundamental disadvantages, has more than 80% market share globally, but has some fundamental disadvantages in terms of the ability to decarbonize, right? Second is what is called the direct reduction of iron route combined with electric arc furnace, in which case you take the iron ore, so you have a shaft furnace, and you directly reduce iron ore to iron through a DRI route, where natural gas plays a major role, substituting what is called coking coal, which is used in blast furnaces. And that, of course, provides relief in terms of emission footprint right there. What comes out of the shaft furnace is molten metal, iron largely, and then that is pumped into an electric arc furnace, which is powered by electricity and with some scrap to ultimately result in what we understand as steel today. This is an attractive route. It already brings the traditional product carbon footprint of the blast furnace route, which averages around 2.2 to 2.5 ton of CO2 per ton of steel, already to 1.5 to 1.7, based on which part of the world you're operating, what are the emission intensity of the grid, and so on and so forth, right? And the third bit is the most exciting, which paves the way for low carbon / green steel, where you take high quality iron ore, you reduce it by using low carbon hydrogen, which could have forms of colors, and people call it blue and green. Ultimately, it's got to do with the emission intensity of the hydrogen. And that combined with the power of renewable electricity, round-the-clock renewable electricity to power up the electric arc furnaces, provides a very, very strong combination to ultimately yield very low carbon steel, which could have a carbon footprint all the way to a 0.4 to 0.5, compare that to 1.6 to 1.8, and then for the DRI route, and to almost 2.5 for the blast furnace route. So this is the most exciting field of work currently, and us along with a few other companies are seeing how is it that we can make an active contribution in this space. Steel decarbonization, as I mentioned, is for all its challenges and all the techno-commercials, and of course, Claude also mentioned the challenges of certain projects around hydrogen, having some challenges around FIDs. All those challenges withstanding, steel does offer a very interesting opportunity. And this image here actually is very telling. So from a global demand perspective, as I said, the global demand for low carbon steel is expected to rise until 2030, right? And that is the exciting bit. That is the big market indicator, partly driven by European Union and other active markets, which is propelling a lot of effort into low carbon steel and low carbon hydrogen and round the clock renewable electricity. The impact of green steel, right? If you look at the end product based on which product are you looking at, which product segment, automotive, be it construction, and so on and so forth. The impact of the higher cost of such as hydrogen or round-the-clock electricity is there, right? And that's this graph on the right essentially is trying to map that out on what sort of impact it has. And that number, for instance, for the automotive sector has its own set of numbers which are on per vehicle basis, not significant compared to the traditional cost of the vehicle itself. So a cost of a low carbon or a green steel built vehicle or a car is not significantly more than what the overall cost of a traditional steel vehicle is. So those are the kind of sort of market indicators that are propelling the technological innovation, providing the policy support to drive this. As one instance, you're probably aware that the European Union has been very forward-looking, very forthcoming in supporting steel manufacturing by providing almost $9 billion of subsidies, another couple of $1 billion of subsidies for manufacturing of low-carbon hydrogen. So I think all these elements will eventually propel into making the low-carbon emission steel not only a reality, but an acceptable reality in times to come. The challenges, of course, do remain on the CapEx side to be able to energy transition such a large sector, often referred to as a behemoth. A lot of new infrastructure has to get built. That includes renewable electricity, solar and wind farms, that includes electrolyzers. And we've seen some very interesting market trends in terms of price of such electrolyzers across different technology types, be it alkaline, be it PEM, be it solid oxide, and so on and so forth. But there is the green shoot is that as the volume expands, economies of scale kick in. I think there's a tremendous work happening in parts of China to sort of reduce these costs and increase the market acceptance. I think it will be very interesting to see how these reduced electrolyzer costs play a major role in reducing the overall capex that is required for energy transition. One of the other interesting factors is the sheer electrolyzer capacity that is required to be able to operate these steel plants 24/7. Remember, these are 24/7, almost 365 days a year running kind of industrial facilities and are not suitable for managing intermittency. So there's a lot of work going on matching intermittency of renewable power to capacity utilization factor of electrolyzers, to hydrogen storage, or on the back end, how do you store green electricity to drive those electrolyzers 24/7, ultimately to be able to deliver the required hydrogen that is required for the DRI furnaces. In terms of way forward, I think it's exciting times. As I mentioned, a lot of companies in parts of the world, a lot of economies have set very ambitious targets for low carbon steel. Tremendous amount of work is happening in Germany towards what is called low emission steel standard, abbreviated as LESS, less. I think That says it all on what the target is to lessen the carbon emission footprint of steel. And another interesting trend that we're seeing is delinking of the steel industry. There was a time when geographical location of steel industry was very closely tied to geographical location and availability of raw materials, coking coal, operating blast furnaces, and so on and so forth. Whereas it is a conceivable idea that the future would look slightly different than that. You can imagine such industrial clusters being developed around attractive renewable energy potential geographies, right? So places which have great solar, great wind, have offshore wind potential, so that they can invest and deliver very, very competitive HBI or DRI, direct reduced iron or hot briquetted iron. And that iron can be shipped to other parts of the world, and that's where they get converted to steel, which is called the downstreaming. So the traditional mindset and understanding of integrated steel plants and integrated steel facilities is going through a very, very interesting delinking and sort of rethinking about this. And we're going to see more of that coming in. In terms of MENA region, in all of the contexts that I discussed, MENA region actually offers one of the most interesting geographies to be doing this for a couple of reasons. Number one, I echo Claude's sentiment about location. It's a very interesting geographical location, given its proximity to the European markets, Asian markets, and of course, proximity to raw materials in different parts of Africa. It is also a hub of natural gas supply, and natural gas is what is called an energy transition fuel, till the time we see the techno-commercials and economics of low-carbon hydrogen actually become a major reality. So in that sense, it provides a very interesting transitionary approach where natural gas can start driving these DRI furnaces eventually to be blended with hydrogen as it comes online, as this infrastructure gets built, eventually to get to what is called 100% hydrogen. It offers large coastlines. I can tell you, for example, about Oman, a lot of offshore wind potential, tremendous solar and wind potential, and that all helps in reducing the capacity of electrolyzers, reduce energy storage, which is the expensive bit in this entire equation. Last but not the least, I think GCC ultimately operates as a single integrated region, and that is kudos to the leadership that this region actually has, right? I mean, in terms of financing, in terms of support from the Sovereign Wealth Fund, in terms of support of the polity, I think it creates a perfect storm to be able to set up these very interesting low carbon emission metallics, in which iron and steel are a major part of. So in that perspective, it offers a perfect storm, and MENA region, from that reason, is a very interesting place to be doing energy transitioning, such traditionally understood as hard to abate sectors, but I don't think that would be the case moving on. So let me stop here. Happy to take any questions and queries and do a deep dive into any other questions the audience may have. Thank you.
Thank you, Ms. Malik, for your excellent presentation, which really deepens our understanding of the steel industry and where hydrogen can add maximum value for not only the decarbonization, but also new economic opportunities. We got some really interesting questions, but for now, I will only ask one and reserve the rest to the speaker engagement session. I want to focus on the CapEx part. So what power tariff level makes green hydrogen affordable for green steel manufacturing, in your point of view?
Interesting question. When you say what makes it competitive, right? I mean, if you look at base case, it would not be competitive, right? Simply for the fun reason that if you look at natural gas today at, let me throw a number out there, let's say about $4 per MMBTU, right? Which is used primarily in the DRI furnaces, that translates to less than $0.50 per kg equivalent of hydrogen, right? So you see there's almost an 8x gap between the reductant there, which is hydrogen compared to natural gas. So no specific, I mean, the answer to your question would be almost close to 0.1, which is practically impossible, right? But the hope is that the market will evolve, the green premiums will evolve, the off-takers for steel would be able to extend support to be able to help bridge, if not all, some of that gap and pave the way for competitive iron and steel manufacturing.
Thank you very much, Mr. Malik. We'll return to you later. And next, we'll explore the potential of hydrogen in clean mobility and other demand scenario. Please welcome Mr. Nicolas Poirot, CEO of Air Liquide for Africa, the Middle East, and India. Mr. Nicolas, the stage is now.
Yeah, thank you. Good day, everyone. I'm very happy to be here with you after these two great presentations. Let me share my screen briefly. So I'm based out of Dubai, and I indeed cover Africa, Middle East, India, and actually Kazakhstan. I used to be in China for 4 years, in Southeast Asia for 10, and in Europe for quite a few years. So I can also share in questions anything you'd like to know a little bit more globally. Let me see if the sharing is working. Can you see my screen now? Yes? Yes, you should see my screen now. So just in a few words before we get into the mobility and hydrogen, just to remind all of us, because a lot of us look at hydrogen today as an energy vector, energy transition enabler, and we've been there for quite a few years already. Hydrogen is, of course, one of these molecules that some of us have been producing or using for many years. So in Air Liquide, we are a global leader in different molecules. So we are not an energy player, but we supply technology or gases to energy players or to, of course, all types of manufacturers. Oxygen, of course, goes to hospital, as we all know, and a lot of gases are used to enhance productivity processes or reduce pollutants. Hydrogen has been used for many years, especially for refiners, but not only, you have also a lot of application. So in whatever topic we speak about for the future of hydrogen and the place it will play in what we hope the energy transition acceleration, let's remember that hydrogen is also a versatile molecule, and by using different markets, different existing local base for industry, we just discussed about green steel, this can help mobility to develop itself, or you could try to develop mobility on its own, not on the back of existing large users. So I will come back to that later. Just briefly on our presence here in a region on Africa, Middle East, and India, we already operate quite a few plants in the main industrial countries, especially in the GCC and MENA. We've been in Tunisia and Morocco for 100 years. In Egypt, in India, in many countries, we do have a few electrolyzers running as we speak, but mostly for industrial usage today, glass making, for example. In Asia, hydrogen is used, you should know probably, mostly for electronics fabrication as well. Here in Saudi Arabia, we're operating the largest SMR, metal reformer in the world, in the Yanbu side. That's nearly 300,000 cubic meters now of hydrogen. It's not yet green hydrogen. So as you know, most of the large production today in the world are still gray hydrogen, with many technologies of carbon capture, recycling, transforming CO2 into CO, for example, for some of our customers. We can reduce the carbon content of the hydrogen, but the pure blue and green hydrogen, we'll discuss that later, will come or are coming from either electrolyzer with zero carbon power or purely captured sites where we can discuss about blue hydrogen like the US is doing. We also have many air separation plants around the region. And of course, in all these countries on the map, and I think that was mentioned by Claude, a lot of these countries have a lot of potential or existing development on renewable power. So that will go together. The clean hydrogen mobility will come and is coming on the back of what's happening with windmills, with, of course, nuclear power in some countries, depending on the regulation and on the photovoltaic panels, with the question always of the intermittent supply. So hydrogen also comes as a storage, as a buffer for industrial users of mobility to make sure the continuity of usage is present there. We also have here in the UAE, in Ras Al Khaimah, a global workshop for engineering where we do manufacture a lot of modules for our plants that can be supplied everywhere in the world, including cryogenics. So it's a very mature part of the world already, the GCC MENA and also the rest of the region. We can operate remotely a lot of plants already, so that gives us a lot of hope for the future in the region. If I continue on more globally speaking, the 60 years of development of hydrogen, they're already massive for us. We're already producing 3,500 tons of hydrogen. Like I mentioned, most of it today is gray, but you can see on the maps, we have connected by thousands of kilometers of pipeline a lot of our plants and customer plants. It could be in the US Gulf Coast, in Northern Europe, in Saudi Arabia, in Shanghai in China, or Singapore. The project of Bayton from ExxonMobil was mentioned, with ADNOC joining it. We are part of it because these projects don't only need hydrogen, but they also need oxygen. And that's exactly what we hope for, a combined development on those petrochemical and steel basin, by the way, where you can develop not only hydrogen for the different traditional usage, oil and gas or steel, but also for space, where they need liquid hydrogen, but also to come with carbon capture technology and to do CCUS. I will come back to that. So it's an existing business, it's real. Many people the past few years, of course, came very fast on the hydrogen energy topic, which is great, and we love it, all of us, all the technology and energy players. But what matters at the end of the day is to make sure not only we all find the right business model and technology, but we find the reliability of supply and the economic value. So experience and expertise of operation, not only project, I think is super important. Then what happened is that the past probably 10 to 15 years, a lot of us worked on developing the different fields for hydrogen to have a space on mobility one day. So Air Liquide, like many other companies today, I think more than 100, we were the pioneers of creating the Hydrogen Council, which was, for example, at the COP28 last year in Dubai. And most of the large companies, it used to be mainly Japanese, Korean, European. Today, you will find most of the large players in the world joining the Hydrogen Council. So this is very important. Advocacy with policies, because different countries have different policies. We mentioned just before the IRA today, the so-called 45V, 45Q. You have the different policies in Europe, what we call green or blue hydrogen, content of CO2 in hydrogen. So policies is super important. Market development are important because you need different pilots, but then you need to go for scale. So for many years, we started to co-develop with people like IKEA in France for forklift, different business model on fuel cell forklift. Of course, today we all know different projects in the world on tramways or trains or cars. The picture you have here is a company called HIF in Paris. So we co-developed with some of them, and today with Total Energy, different business model where some of us have different space in the business model in a chain. Not all of us should be in all part of the chain between upstream and downstream. That's the beauty and the complexity of mobility. So from the car manufacturers to the station, to the supply to the station, to the production and to the policy, it takes time and complexity, but we can do it. In Paris, you have a taxi company made of about, I think, 200 taxis today that run only on hydrogen with different stations. You can see that in Roissy and Orly. During the Olympics in Paris, that was all the cars and buses for the athletes were hydrogen driven, green hydrogen. So those type of models are very useful. We did it in Beijing Olympics also a few years ago. And then, of course, technology, because we all know a lot of challenges we all face today are not only regulation and markets, there is also technology. You need scale up, especially on electrolyzers, but you need scale up on materials. So a lot of people are working on materials for storing hydrogen in different vehicles, trucks, cars, even airplanes. So storing hydrogen, storing liquid hydrogen, which is cryogenic temperature. This is very specific. So you need material, you need different technology to produce or to liquefy hydrogen or to transport it. And I will come to that. So technology has moved very fast recently, but still you can still see many things are expected to happen to bring hydrogen at scale in an economical value. On that slide, which is very busy, I'm sorry for that, you see today that's the full complexity of playing in mobility. And when I say mobility, again, it could be passenger vehicle, it could be fleets like taxi fleet, school bus fleet, trucks and heavy vehicles, of course, which you see developing very fast in China, for example, today. And you can go to trains and all type of transportation, cranes to operate a port, Airports are very good hubs at the moment to develop hydrogen mobility around the airport hub and the ports if it's near the airport, like it is in places like Dubai. There are many types of bricks between upstream and downstream that we work on, sometimes as a technology provider, sometimes as a co-investor, sometimes as an operator. But again, we are not an energy company, so partnering and not only creating a model which is in a normal industrial model, a supply model with suppliers and customers, that's the key. You need to have different type of consortium where you could have public people, it could be a city, it could be more than a city, a small country, but then you need private operators, you need energy operators, and also mobility OEM. That's exactly what we did in China, sometimes with car manufacturer or truck manufacturers. So the challenges for the hydrogen mobility still are many. I used to drive myself a Toyota Mirai when I was in Paris 10 years ago. We used to have an operation for a station when I was in Singapore in 2004. So this is at the same time not new, but we all know probably some of the expectation on how fast we would see hydrogen vehicles on the road. I think they were probably over-optimistic a few years ago. We could see a lot of shift into captive fleet heavy vehicles at the moment. I was mentioning China, where some people expected millions of cars on the road, fuel cell. Today, you see clearly on the roads in Shanghai, mostly electric vehicles, but you see hydrogen trucks moving very fast. The biggest station for hydrogen filling we ever co-built is near the Beijing airport in Daxing. Airport is 4 tons per day, while most of the stations in Europe are a few 100 kilograms per day. So you see some countries manage to focus on development of some heavy vehicle and it worked. But the expectation on the mix of vehicles on the road between traditional, hybrid, full electric, fuel cell electric, I think it's still at the moment a topic that depends on each country regulation. Some countries depend more on subsidies. Some countries depend more on regulation, and some are purely private competition to make sure the best people wins. So we are still at the beginning, actually, and we are behind the expectation on the number of passenger vehicles, but not on mobility because we see many things happening. On the electrolyzers, because that's one of the key components of green hydrogen, especially for mobility. So when speaking gigawatts, gigawatt electrolyzers are really what we need, what a lot of countries work on for exporting energy to become a part of this major oil and gas, LNG competition, exporting to countries like Korea or Japan, for example. But here we're speaking megawatts. We do have a lot of experience on alkaline electrolyzers, small size. In the last few years, we can see the acceleration on the size on actual projects, so not MOUs, not even FID, but projects under operation that we have in Canada, 20 megawatts. In Taiwan, we have 25 megawatts. In Germany, we just started the new 20 and 10 megawatts. PEM electrolyzers, we have a partnership with Siemens Energy, and we are building, as we speak, a 200 watt or 200 megawatt electrolyzer in Normandy. I will speak a little bit more about it later. So the different technologies, PEM versus alkaline, we speak a lot about Chinese electrolyzers or different type of technologies and MEC. This is going to continue to evolve, but this is key for us to continue to experience operation of these electrolyzers beyond the paper promise to make sure reliability of supply, the energy consumption in time, and all those type of KPIs are something that we are very mature. So it's super important for us. And it's easier for us because we can use these to co-produce for our traditional customers and to start mobility on that base. On examples of ecosystem, because I think for us in MENA and at GCC, this is exactly what matters to us, is how do we leverage the fact that in this part of the world, you have ambition to be a global player on energy transition. So it could be ammonia, hydrogen, or others. You have the existing petrochemical basin, we all know that, in Saudi, in Oman, in the UAE and elsewhere. And sometimes you have steel makers nearby. And you also have very near big hubs, transportation hub, airport or ports. So what we are doing here on the map, that's the western part of France, not far from Paris, is Normandy. We managed to connect, it took some time, two major refineries from Total and from ExxonMobil. We operate the existing or new SMR, but we also have our own technology to capture the CO2. We joined a consortium of companies using this type of liquefied CO2 to ship it and to do CCS in Northern Europe. You know, in Europe, you have a couple of those projects in Northern Europe, like what we are doing in Rotterdam and Antwerp port. So what you see in Normandy is great because not only you decarbonize traditional industrial basin, but you leverage on that to also give access to mobility and bring green hydrogen to Paris, for example, and to the population base. So that will be one of the key questions for MENA. We have the petrochemical basin, so you could scale up on capturing and having blue hydrogen and very soon to see those green hydrogen projects in MENA with photovoltaic panels and windmills. But the key is really to transport it to the refilling station where you need the fuel. So it's exactly like the fuel today. Here in Dubai, you have some companies bringing the fuel to your home and fill up your car. But the supply chain part of the hydrogen mobility is something very different from industrial usage, from pipeline, for example. So that's really the key topic for us, is to continue to work on technology. You see on that map, traditionally, we transport gaseous hydrogen to small customers or to filling station in 200 bar tube trailers. You need 12 of these trucks equivalent if you have only one truck in liquid hydrogen. So no question, to really develop mobility with hydrogen, we all need the manufacturer of the cars and the trucks, the supply chain and the station to continue to move to liquid. So we do have in-house technology for that, to liquefy hydrogen. More and more, the energy you need to liquefy hydrogen goes down. So it's giving us good hope to bring it to an economic stage. Scaling up is important. So again, trucks compared to cars give you bigger station, bigger economy of scale to bring those trucks to the station. We have example in the US, we have a 30 ton per day liquefier in Nevada, but I also have a few more examples in Korea now at 90 tons per day. So again, scaling up the capacity to densify, liquefy this hydrogen and bring it to where you need it, where you have the population base, to bring this hydrogen to where the cars and the trucks are is still very important for us. So just to finish on that slide, this is again a few examples, and for us in MENA, the left part is hydrogen filling station. So many people are involved in that domain. We are only a piece of technology provider, a key piece of it, but we are not developers. Our aim is not to operate it. So within MENA, that would be the question: is it going to be likely driven by the NOCs to make sure they have multi-hybrid fuel station and hydrogen station or dedicated hydrogen station? How far will be the station to the source? Are you going to produce on-site with a small electrolyzer, or are you going to produce bigger size green hydrogen somewhere not too far and bring it to the station? So that's super important, liquid or gas, I mentioned it before. In the middle, you can see we are testing, and many partners in the world are testing different type of consortium, JVs, partnership, I mentioned that before, to find whatever is the model, whatever is the user, what is the best model to bring the different partners into the room, including capital and private equity when it's needed, including financing, but also public authorities. And I think in MENA, that's what we start to see is very efficient here because you have a very smooth and fast decision-making from governments to the NOCs and of course to the infrastructure. Finally, something which is really, I think, a strength in MENA, and I mentioned it before, is the size of the hubs, airports and ports. We are working already with some airports and of course with Airbus. We really believe to size and to base your development on hydrogen mobility on a captive part, which is an airport or a small city. Like in part of Dubai, you have different parts of the cities which are developed like a standalone city in terms of energy and utilities. The model they've done in China is the same, is trying at that level, which is not too big and not too small, to bring a full comprehensive view on waste management, utilities, green hydrogen and others. You've seen that in Japan, they've tested that in Japan, a pilot small city around that. You see that across the world. It could happen here in MENA very easily. So thanks again for your attention. I'll be happy to get questions. To be again clear to conclude, Again, we are not in car manufacturing or trains and mobility. We are not an energy player, but the experience of the industrial gas players is helping us to help and partner with other players in a region, and that's really the key. If there is one domain, I believe, that cannot be developed by one player alone, it's probably hydrogen for mobility. And again, we should balance the expectation. I believe there is a space for it. We should not over-expect from it. We should know what is the space that hydrogen mobility will be the most efficient and the most economical for the energy transition of the world. Thank you for your attention. Back to you, Molly.
Thank you, Mr. Nicolas, for your very kind sharing. And we all know that Air Liquide is one of the most experienced hydrogen stakeholders in the world. So I want to focus on the commercialization of the whole ecosystem. In your mind, what does an efficient hydrogen business revenue stack look like, particularly for hydrogen mobility?
What would be the efficient hydrogen revenue?
Revenue stack, more like the business model.
Well, it's really difficult to say because it will depend. You've seen the full stack in a supply chain and different pieces. And again, depending on the size and the country, that could be very different. Again, the issue of the hydrogen mobility as a business itself, if you believe it will help to decarbonize some parts of the mobility, and you compare that to the gigawatts used for exportation and energy player, I think let's be clear that it will be smaller. It has a big space, but it's not going to take the same space as the gigawatt exportation.
Thank you so much, Mr. Nicolas, for your kind address, and we'll come back to you for the hydrogen refueling market question later. Thank you. And next, we'll focus on partnerships, which is very crucial for MENA's export market. I'm pleased to welcome Ms. Pauline Raabe, Project Manager Outreach at H2 Global. Ms. Pauline, I give the stage to you.
Yes. Hello, everyone. It's a pleasure to be here. I will also quickly share my screen. My name is Pauline. I am a project manager at the H2 Global Foundation, and my focal point is the Middle East. And this is why I do have the pleasure to talk to you today about the mechanism. Some of you might be familiar with it, and some to a lesser extent. So I will wash through it, but feel free to ask questions afterwards. So the H2 Global mechanism was created as a reaction to the fact that there is no market for clean hydrogen and its derivatives yet. And here you can see some of the reasons that we identified, so that there is a lack of price transparency, there's no liquidity, no certification, so that neither investors nor suppliers or off-takers actually do know what is the definition of a green premium, and will this definition still be valid in, let's say, 5 to 10 to 20 years time. And all this adds to the fact that while there's a consent that clean hydrogen and its derivatives and biofuels are key to reach the energy transition and the net zero goals, there is a lack of FID and not a high willingness to pay. And the H2 Global mechanism is addressing this through a pioneering double auction mechanism. So it's a competitive auction process, both on the supply side and the demand side. And its setup is through an intermediary called HINTCO. And HINTCO acts as a market participant and as an off-taker. And HINTCO concludes contracts with suppliers for long term, so to create investment security for these producers, and then sell the green premium into off-take markets on short-term contracts to create as many price signals as possible and to overcome the lack of price transparency. Because what we see is that we really need to in order to reach FID, we need bankable projects, and this is not yet the case through various risks. And HINTCO kind of absorbed these risks, and I'm going to show you how it works. So basically, you can see the two sides here. So the auction on the supply side and the demand side. It's really up to the provider of the fund that funds HINTCO to decide what goal should be achieved with this auction, right? May it be decarbonization of a certain sector, may it be energy security, and then to make sure that HINCO can cover the cost of difference between the price for the gray product and the green premium. And what we expect is that the price for clean hydrogen and its derivatives will decrease over time, because there will be a higher willingness to pay, because there will be certification schemes applied, and all this will inform the market. There will be more price signals, and then consecutively we expect that the cost of difference that would need to be covered through a long-term contract of, let's say, 10 years will decrease. And this has the big advantage for the provider of the fund, mostly governments, who provide subsidies, that it's a very efficient subsidy tool, because the amount of subsidies needed to cover this cost of difference is only retrieved upon the arrival of the product. And then again, this will be, for example, in this case, only be on an annual basis. And then depending on how the price difference, the price gap develops, lesser and lesser funds need to be retrieved over time. And at the same time, there is liquidity in the market and price signals that other market participants need in order to take the next step. With regards to the MENA region, let me just quickly explain the different commitments that we have currently. So we as H2 Global, we are non-for-profit. So we really believe that it's key to share the knowledge and the lessons learned that we gain in our auctions, to share this and to enable also other players, other governments to use the H2 Global mechanism for their respective goals. So, for example, here on the map, you can see the countries in dark blue. Those are countries where H2 Global already has funding commitments. Those are so-called joint tenders between the German government and other governments. I will come to this in a minute. But then, for example, it's not only about joint tenders, it's also about knowledge exchange. So, for example, H2 Global helped to develop the H2 demand scheme in the US. And currently, two of my colleagues are in Japan to foster the knowledge exchange there and to support the Japanese government and key stakeholders to apply the H2 Global mechanism to their respective conditions and goals. And the MENA region, you can see that there are two colors. So the UAE, we are engaged in negotiations about a joint tender. This would be a joint tender between the German government and the Emirati government. And we went to Oman last week. We attended the decarbonization dialogue there, and we had very good discussions. We tried to understand how the H2 Global mechanism can support the Omani government, and similar discussions are going on in Saudi Arabia. Here you can see what I already mentioned. So joint tenders means that not only one government, one provider of the fund, but two team up and provide money to the H2 Global mechanism. The pilot auction results that I will present in a minute, they refer to the first tender by the German government, represented by the Federal Ministry for Economic Affairs and Climate Action. And there are other tenders in preparation, and joint tenders have been announced with the Australian government, the Canadian government, and the Dutch government. And what you can see here is the flexibility of the mechanism. So it can be used for two countries, let's say two import countries, like in the case of the Netherlands and Germany, to team up and to provide a higher amount of fund to also scale up the auction and the results. But also an export country and an import country can team up, like in the case with Canada and Australia, to create win-win situations. So to support the production projects in the supply country and to offer the green premium at a competitive price to the demand country. up to date, as you can see here, 5.8 billion euros have been earmarked for the H2 Global mechanism, so all the tenders combined. And as I already mentioned, but that's important to stress, this is an agnostic mechanism. So it's really up for the provider of the funds, for example, whether they want to do an auction only on a derivate, so for example, green ammonia, whether they want to purchase clean hydrogen, whether they want to let companies compete against each other in a specific region, what sustainability criteria shall be applied. So it's really, we are working very closely with the provider of the funds to make sure that we can achieve the goals together. As promised, a very quick overview of the results of the first pilot auction. This was published in July this year. You can see that the first tender was divided in 3 lots. We have the results of the first lot already. And the award went to Fertiglobe, a consortium that is actually also based in the UAE. And their project called Egypt Green Hydrogen. That's located in the Suez Canal Economic Zone. And what you can see on the right-hand side are the long-awaited price signals that I was mentioning in the beginning. So we reached a net price of 811 euros per ton and a flat price of 1,000 euros per ton. And this price will be fixed for the duration of the contract. So in this case, 7 or 8 years. And the total volumes until 2033 will sum up to nearly 400,000 tons. And the plant delivery is in 2027. And in accordance to the H2 Global mechanism and how it works, you can see here we already conducted the supply side. So we do have the results for the auction on the supply side. And now HINCO will conduct another auction for the off-takers, and this will start around about 1 year before the first arrival of the product, so towards 2025, 2026. Just some key facts on the project itself. So there will be wind and solar power plants installed. And the electricity that won't be used by the project itself will be transmitted to the local grid to make sure that there will also be local use in line with other sustainability criteria that the German government put forward. And some of the lessons learned from this auction was basically that the lot sizes, in this case 300 million euros, were too small really to attract many bidders. So in order to really reach an economy of scale, we would need to top up this amount. Nevertheless, we managed to get a contract, and I think that's already a very positive result, and it shows that the market for green ammonia is ready once there is some support from public subsidies. When the whole process started, the RED delegated acts in the European Union was still not published. So it was really up to the team to define this green premium. And they then incorporated afterwards, of course, the European law and regulations. But this is really was one of the key risks that needed to be absorbed through this double auction mechanism. And we were happy that we had good feedback from the bidders that played a crucial point also with their insights to get this whole project forward. The next round of auctions will be published towards the end of this year. So we will incorporate some of the lessons learned, but maybe also as a disclaimer. So this is by the German government. So all the information that you can see here is still, let's say, preliminary and needs to be confirmed upon the announcement the tender, but key lessons learned that were used for this tender was that we need to diversify more. So there will be tenders now on a regional basis, so that, for example, a company from North Africa will not compete with one from the USA, for example. And the German government decided to go for a vector open approach. So to not limit it to green ammonia like they did in the first lot, but instead to leave it up to the producer to decide on the carrier, with the only requirement to have clean hydrogen after delivery. So basically, I watched through this, but to end on a note how we are organized, I am now part of the H2 Global Foundation, and we own HINCO. HINCO is conducting the auctions. HINCO is taking over as soon as there is a tender commitment, and of course, it is ensured that there is a firewall between our engagements with companies on the foundation level and the cooperation between HINCO and the companies. But we really rely on endowments of our donors. And we were awarded a grant this year by the Bezos Earth Fund. But as you can see, this underlines again our non-for-profit outlook, and also our key goal to really make our knowledge accessible and to contribute to a creation of clean hydrogen markets. Thank you.
Thank you, Ms. Pauline, for your very kind sharing. And we all know that H2 Global is a very innovative and a very international platform that really benefits the market creation. Because you are not going to stay longer, so we will answer the important questions within this round. And I have 3 for you. The first question is about offtake. We know H2 Global is a double-sided auction. So what are the current discussions around offtake in the EU and other regions?
I think when it comes to offtake, it's always double-sided, right? So we need to have demand security in order to make sure that producers then can reach FID and the offtake is guaranteed. So the reason why H2 Global was founded is exactly this, so right, that we need an instrument that can bridge between this gap of supply and offtake, and then also to develop solutions that can provide results for different market participants.
And after the first tender, what is the expected cost of green ammonia in future tenders? And also what the price compared with gray and blue, if you can share with us.
So this was a very important price signal, but of course, this is a price signal for now. So we also don't know how the market will look like in 1, 5, 10 years time. But as I already said, what we expect is that the price of green premium products will decrease and fossil products will rise. In this regard, when there is a certification, when CBAM on a European level is in place, I'm pretty sure that we will see that there will be a shift. But it's really up to us to make sure that we reach this tipping point timely, to make sure that the new technologies can be deployed when they are needed.
And the last question is really about the broader perspective of e-fuels. So currently we are mainly focusing on e-ammonia, but what about e-SAF and e-methanol? What is H2 Global's perspective regarding the 2 fields, and what are your future plans?
So for lot 2, methanol, the auction is still ongoing. So we expect results soon. With regards to lot 3, we actually needed to close this one because of a lacking market maturity. So this was a very, of course, this was unfortunate, but then it also gave a very important signal that the market is not ready yet. And it also shows that while we provide a very important solution and let's say a piece of the puzzle, we really need more initiatives like, I don't know, First Movers Coalition, Zamba, to really drive forward this this development.
Thank you very much, Ms. Pauline, for your insightful answer, and we look forward to hearing more news, good news from H2 Global, and thank you for joining us.
Thank you so much.
And finally, before we enter the Q&A session, let's discuss clean fuels, a very hot topic recently. Please join me in welcoming Mr. Ali Zerouali, Chief Development Officer at HIF Global. Mr. Ali, the stage is now yours.
Thank you, Molly. Thank you for your invitation. Also, it was really great to listen to Paulina and to see how the market is structured and how Germany is supporting that. Do you see my presentation?
Yes, already.
Yeah, great. So I would like to present HIF Global first very quickly, and also to take time to talk about the market trends and how the market is developing in what we call renewable hydrocarbons. So in the route of e-methanol, which we consider as a building block, and e-methanol is the starting point to develop e-gasoline, e-SAF, e-olefin, and e-methanol is by itself an end product that could be sold and that is widely used today by the market. So first, who is HIF Global? We are considered as the world leader in e-methanol route with several projects that are today under development. We are the only company that is producing e-gasoline. So it's in the south of Chile, but I will come back to that. And we have a project that is ready to build in Matagorda, which is a big project of 1.8 gigawatts of electrolyzer that produces 1.4 million tons of e-methanol. Other projects are much advanced in Uruguay, in Chile, in Brazil, in Australia, and we have offices in 5 locations, including Germany, that is covering the Europe and Middle East. And we believe that now we are extending our footprint in the Middle East and Africa. We believe it could easily play the role of the powerhouse, especially to Europe, when it comes to green hydrogen derivatives, and especially also when it comes to green methane production. As you see in this slide, we have an extensive range of shareholders from US, from Germany, more and more from East of Asia, Japan, Jogmec, MOL, Idemitsu. And we are quite happy about the trust that the market is giving to HIF Global, which is like a startup that is growing very fast, that was created back 3 years ago, and which is expanding very significantly. This is the project that I wanted to share with you, just to explain where we are in the e-methanol. So we are producing e-gasoline, and the only company and the first who is producing e-gasoline, and all the product is exported to South America, to US, to Europe, and is used in the Mobile One Porsche racing that are happening before the Formula One in each weekend. So it works. What is quite funny, when we drive a car with the e-gasoline, people are always asking, but what is changing? We don't feel anything, and this is the beauty of the e-gasoline. It's just the same molecule as the regular one, but made from green hydrogen. And the process is quite simple. So it's a blended between hydro, solar, and wind, depending on the capacity factor and the availability of renewable energy in the area where we develop the e-methanol. This is used to produce green hydrogen through electrolyzers and then blend it with CO2. And I will come back to the CO2 because the CO2 is a real challenge to produce green methanol. It's a critical feedstock, and most of the areas in the Middle East and Africa where we have wonderful renewable energy resources, meaning high capacity factor of wind, of solar, you don't have a lot of biogenic CO2, which could hinder somehow the development of production that could be exported to Europe, because the European legislation is very clear on that. They are seeking for biogenic CO2. For industrial CO2, when you have an ETS or a carbon pricing mechanism, up to 2041, which is only available in Europe, or direct air capture. Direct air capture is a very promising technology that could help to shift or to remove this hinder of CO2 in very desertic and arid areas. We are investing in direct air capture, and we are building also a proof of concept in Chile in order to produce the e-gasoline. And as I said, so you have the route of Fischer-Tropsch, which HIF is not using, and you have the route of methanol synthesis. So the route of methanol synthesis is the one that we are following. We believe that it's the most competitive one, and then it also helps to mitigate the commercial risk, because you have one building block, which is the e-methanol. So methanol synthesis and distillation, which is gathered now here in the picture as the methanol synthesis. And from there, you can do MTG, methanol to jet fuel, MTG, methanol to gasoline, MTO, methanol to olefins. And the offtake sectors are quite large. And we will see that in the next slide. So for me, this is a very interesting slide, and it shows so there is kind of a race between e-methanol, what we call renewable hydrocarbons, which includes e-methanol, e-SAF, e-gasoline, and so on, and the e-ammonia. So we see all the applications. So in green, you see the applications that are for the renewable hydrocarbons, and in red you see also those who are for the ammonia. In yellow are all the applications that could be electrified. So the more you go in the scale, the more you realize that there are a lot of applications in the world that cannot be electrified, and the only way to reach the carbon neutrality by 2050 is to have the energy transition, apply it to these molecules, and then to return them to green. And we see that from the e-methanol that we have in green, we can address the shipping industry, so directly, and more than 90% of the vessels that are ordered now are dual engine, e-methanol and e-LNG, e-methanol and another type of energy used. e-SAF and SAF for the jet aviation, it's also a chemical feedstock. It could be used in small vessels that are flowing on the rivers, in very big atmospheric engines that are not made for people, but for industry and generators. So a very important market, and this market is coming to reinforce the existing market. So today you have more than 91 million tons of e-methanol that is currently traded all over the world each year. Which is very interesting is that the only region almost that has a real excess in terms of production in comparison to the demand is the Middle East and Africa. And this will be enhanced with the green methanol and with all these derivatives that I already mentioned, ESAF, e-gasoline, and so on. So Middle East Africa is expected to really play an important role in the world when it comes to renewable hydrocarbons, if the challenge of CO2 is addressed. And the main market for Middle East Africa in terms of competitiveness, logistic cost to be reduced, and so on. So the most promising market will be Europe. And why Europe will be an important market? Because of the proximity of the two regions. So I wanted really this presentation to be quite short in order to leave enough time to interact with the audience if there are some specific questions to be addressed. And thanks to the Refuel EU Aviation and Fuel EU Maritime, the needs of e-methanol or ESAF is going to be more and more important in the next years. We see that already today there is a quota that needs to be put in this for the vessels and for the airlines in order to reduce the carbon print. And the quantities will come on the top of the e-methanol that needs to turn from gray to green, and the market will be bigger and bigger. So the two markets that are really ready to go are the maritime and the aviation. And Pauline has just mentioned it, that we still are facing some hinder in terms of gap of price. You have a factor basically between 1 to 3, 1 to 4 between gray and green, and legislation or some tools like H2 Global that could reduce this gap will allow the market to ramp up and to accelerate. So today, if you look at the aviation sector, many of the airlines are already paying the fine for the amount of SAF that they cannot blend in the airports where they take off from, because of the lack of production and the lack of product. And this for mainly I will focus on 3 or 4 main reasons why we don't have the production that is meeting the demand for the moment. First, it's because of the CO2, as I said. So if we consider all the typologies of CO2 that could be accepted by the EU legislation, mainly because this is the market, the main market for the Middle East and Africa. We see that we can exclude for the moment CO2 captured from non-habitable sources like cement plants, mainly because the carbon tax mechanism and ETS are not available in these regions. So what is quite amazing is that if you take a cement facility in Europe, Europe is accepting e-methanol made from CO2 captured from this cement facility. But then if you just transport it like 14 kilometers, let's assume from the south of Spain to the north of Morocco, the same facility with the same mix of energy, with everything similar, then the CO2 is not accepted because of this carbon pricing mechanism that doesn't exist in Morocco or in any country in the Middle East Africa. Then there is the possibility to seek for biogenic CO2, but then still in Middle East Africa, Middle East and arid areas, the amount of biogenic CO2 is negligible. So it doesn't help, for example, in Morocco or in Oman that we studied, or in Saudi Arabia, countries that we studied in a very deep details. You don't have the availability of biogenic CO2 for even, let's say, 300 kiloton of e-methanol a year. And how to collect that is very complex when you can reach the threshold somehow. So the only way is to import liquid CO2 from tropical areas. So be it biomass in the form of biomass or already liquefied CO2, but then the process is quite complex and it could increase the cost of the CO2, which has an impact then on the bankability of the project. And this is the only way to do projects now, unless the legislation is changing and giving more room for the development of renewable e-methanol based on the CO2 that is available in the region, in this Middle East and Africa region, at least for the first years. The most promising technology is the direct air capture, because there you can get water from the air and you can get CO2 from the air. What we see in the projections is that the cost could be even more competitive than the biogenic CO2. Not as much as industrial CO2, but we see that the legislation is stopping that in 2041 for the industrial CO2. So anyhow, it's very promising, and I think it's a disruptive technology for all the market. It's technology that could be applied also for CCUS and for CCS. So very promising technology. Another hinder to address the European market, and we see that US now is applying the Howry matching, UK the 30 minutes matching, half an hour matching, and Europe is applying the Howry matching. So the Howry matching means that you can only use the electricity that is Howryly produced by renewable energy facilities, unless the grid is filled by more than 90% of renewable energy, which is not the case in the Middle East and Africa, which means that you cannot reach like a good LCOE with a capacity factor that is above 65% in the best case. And 65% in the best case means that your downstream facility, electrolyzer, so electrochemical facility, electrolyzer plus methanol synthesis plus methanol distillation is running 2/3 of the time. So in another word, it means that you are closing your facility 70% of the time. And for us, we are also wondering why to help, so it increases the cost by more than 30%, and it doesn't have to reduce the gap between the gray and the green. So we are wondering why, to ramp up the market and to facilitate the development of a competitive price in the first year, we do not allow to have, for example, at least 70% of Howry matching and 30% of green certificates. So you can sign a PPA with green certificates in order to maximize the capacity factor of your downstream facility and to reduce significantly the cost. Then the requirement, which is 70% of greenhouse emission reduction, it's still available. The last hinder that I would like to share with you here, that is not mentioned in these slides, and I think it was kind of mentioned by H2 Global, is regarding the uncertainty of the regulation. So it's very important that the legislation is frozen at the FID of each project, meaning that the legislation could evolve, but for the project, once it reaches the FID in a way that it's compliant to the current legislation, then it's frozen, because we need to guarantee to the shareholders and to the developer that the green product that is considered, the product that is considered as green as the FID will not become gray in 2, 3, or 5 years, because the legislation has changed meanwhile. And it's a big uncertainty regarding the project, and it's very difficult to guarantee this kind of uncertainty unless the regulatory, the legislation is specifying that in a clear way, that if you meet all the criteria for green hydrogen at FID, then it will last during all the lifetime of the facility. So here is what I wanted to share with you in terms of the market potential, the market trends, and also the hinders and the challenges that the market is facing now to ramp up the production of renewable hydrocarbons. Thank you very much, and looking forward to your question.
Thank you, Mr. Ali, for your kind introduction about overall e-fuels market and its promising future to our journey of decarbonization. And many of the questions I received are mostly revolve around your business model, because as a developer in North Africa region, it means opportunity, but means challenge in the same time. So a lot of the question is around your investment, the cost of capital barriers in the North African region, as well as the sourcing of CO2, also the lack of infrastructure right now today, who will pay for the creation of this global infrastructure. What might be your response to these questions?
I think that the cost of capital is not really an issue in these countries, because the countries that we are now focusing on for the moment in the first stage are Morocco, Saudi Arabia, and Oman. And the credit rating of these countries is very good. Even the cost of capital is very low in some countries like Saudi Arabia. The financing structure are very, very competitive. And when you know that this is very CapEx, the CapEx is very important in this project. And when it comes to project finance, we know that the interest rates are representing something like between 30 and 40% of the final cost. So when you have very competitive financings and the cost of capital is quite low, so you can even enhance your competitiveness, which is the case in these countries. These countries are very business friendly. So we see the countries a very a good spot to produce green hydrogen, but also to work on local content and to make this green hydrogen not only profitable for Europe as an importing country, but also profitable for these countries in terms of value chain creation, local system creation, jobs creation, and development, and accelerating their energy transition, because we don't suspect that, but these countries could be very important off-takers of renewable hydrocarbons. CO2, I already mentioned that, I think, in a very detailed way. That unfortunately is a challenge, is a hinder. As we are only focusing on that, we have found solutions, and we are quite comfortable with that, very comfortable solutions that needs to be challenged with the banks in the region. But we believe that this region could really be the powerhouse of renewable hydrocarbons to Europe and also for the world.
And regarding the infrastructure part, like the cross-border logistics, what is your take for the question?
So in terms of transporting, so you have two things. I think that these regions, so if you take Saudi Arabia and Oman, for example, but also Egypt, they have a very interesting port infrastructure. So the way to the transport or the logistic value chain is there because of the oil business and gas business mainly. When you look to Morocco, for example, it has the biggest port in the Mediterranean Sea, and maybe also including Europe, which is Tangier and expanding to West Nadormed. So the infrastructure, they are building new ports that will be dedicated for the green hydrogen. So it's very promising. Now, it depends on if we are looking to green hydrogen as the molecule that we need to find back in Europe, or as the renewable, as e-methanol, for example, as the molecule that we need to find back. If you look at e-methanol, it's a no-brainer that this region will be the most competitive for e-methanol for Europe. When you look at green hydrogen, then there is a competition between many ways of transport. Of course, pipeline will be the best ones, but it will take around a decade to construct pipelines dedicated to green hydrogen. And the other way is to use e-ammonia or e-methanol. And all our studies are showing that e-methanol could be more competitive than e-ammonia when it comes to transporting to the green hydrogen, depending on the cost of the CO2. If the cost of CO2 is low, then e-methanol could be a better carrier, more competitive. If it's high, then no, e-methanol could be a better carrier. If the cost of CO2 is high, so it's the inverse. So then I think this kind of things will be decided project per project. And what could be very promising is really to have to link between the backbone green hydrogen pipeline in Europe with the region.
Thank you. Thank you so much, Mr. Ali, for your very insightful answer. And now let's move into our highly anticipated speaker engagement session. And I want to welcome back all our speakers back to stage and turn on your video, your camera. So the purpose of this session is really for our audience to walk out of the webinar with inspiring thoughts that can benefit your business. So please do take this opportunity and ask your questions, our audience, because we have the top-notch experts here right at the heart of the industry. And to start, as we wait for the second round of questions, maybe we can start from the demand market, including Europe and Asia. Right now, the EU is revisiting its 2030 hydrogen strategy, and perhaps it will slow down the pace of hydrogen development in supply countries. Also, with regards to the Asian market, they are more sensitive about the price. So compared with green hydrogen, perhaps they will prefer blue hydrogen and blue ammonia. In terms of the overall trend and opportunities for MENA region, what is your take? We would love to hear more insights from the panelists. Maybe start with Ms. Claude from an overview, broad perspective, and to Mr. Malik and Mr. Nicolas as the ecosystem player, and also for Mr. Ali, representing more from the e-fuels perspective.
Thank you very much, Mourey. So if the question is if let's say the demand driven by Europe in terms of hydrogen is slowing down, is it going to affect the development of the infrastructure of low carbon hydrogen in MENA? Most likely, very unfortunately, because unless you take really the same approach as NEOM has taken with Air Product being the off-taker, but currently only having 30% of his offtake really committed, it's extremely complicated to actually go into a large capex investment without having some demand. And the offtake, which is expected from Europe, more on, let's say, green, but is the same as actually what will happen in Asia. So the offtake and the willingness to offtake some volume at a price which is deemed acceptable, it will impact the development.
Thank you. And next, maybe we can come to Mr. Malik.
Question, and I echo Claude's sentiments. I think as this whole industry evolves, so are the demand centers evolving, right? So the conventional ways of doing businesses, the conventional methodologies of where to manufacture, selecting the right locations, that is evolving. And so will the demand centers evolve. So of course, initially it's the European Union that is driving the demand for low carbon products and services overall, right? Low carbon steel and metallics. At the same time, we do see a lot of development happening in parts of Asia as well. Look at Japan, look at Korea, look at India and a few other countries in that region. And there's a tremendous pull for low carbon sort of products and services, primarily driven by the benchmark is already fairly gray, and the benchmark is already relatively higher priced. So for example, if you look at ammonia or natural gas or LNG imports in India, they already are at a commercial level that allows a lot of such renewable energy-based interventions to start making commercial sense. Now, that may not be the case, such as in parts of US and Middle East, where, let's say, natural gas is about $3 to $4 an MMBTU for a typical industry. In parts of region where that benchmark price is already high, I think they offer a very low-hanging fruit kind of an opportunity for these initial sort of market starters or to go up the sort of demand curve. That's one. So I think to summarize, you also talked about green and blue. I think the industry will very quickly evolve to normalizing these. And what I mean by that is using methodologies such as product carbon footprint or PCF, and blurring the lines between what is gray, not gray, but what is blue, what is green. Ultimately, it will all precipitate to the emission intensity of that molecule and ultimately how it is being used. That's the way we look at it, at least having built operating low carbon steel DRI plants, and also putting together a 5 million ton steel plants, which will be primarily driven by low carbon hydrogen and round the clock renewable power here in Middle East.
Thank you. And next, please, Mr. Nicolas.
Well, just to take another approach, definitely, if the topic is CO2, climate, greenhouse gas emissions, what matters is really hydrogen and green or blue for global emission as an energy vector. If you look at mobility, let's not forget, take the example of Shanghai or many cities in China. You also have pollution reduction of big cities with big density of cars. I mean, some of us live in Dubai, you can see it every day. The pollution level and particles is very often more than what I saw in Shanghai just 2-3 years ago. Why? Because you depollute the cities by also tackling trucks, buses, cars that bring pollutants to the city where you have the base population. So I've seen also many countries developing hydrogen first to improve air quality and respiration disease in the big cities. And of course, you have to tackle how this hydrogen is produced and make it green, and then you can solve the CO2 topic. But those are two different topics. And I think you still have a place in MENA to continue to develop huge basins of population like Cairo or Dubai or Riyadh, which more and more will require a better air quality. And hydrogen or mobility, clean mobility, I think will continue to have its own driver in MENA, regardless of what Europe is doing or what the global demand is for clean power, which remains a key question for the global warming. But I think those are two topics: pollutants, respiration in cities, and CO2 emissions.
Thank you. And last but not least, Ms. Ali.
Yeah, for me, I see the market in East of Asia very promising because I think it's very pragmatic. There are, when it comes to the renewable hydrocarbon, they request more low carbon intensity footprint rather than very heavy regulatory framework for the moment. And we see a lot of movement in terms of application. So greening also the coal plants with ammonia or methanol is a trend that we are seeing coming very, very soon in this region. So we see the market very promising.
Thank you. Thank you so much. And apart from the export market, like international demand, I also want to focus on the local or regional demand for hydrogen, for low carbon hydrogen in the MENA region. Which sector would you see early adoption or early commitment in taking the hydrogen offtake?
For MENA, you mean?
Yeah, because
so the MENA region, and I think it's going to be a subject that Mr. Malik will be able to speak in length. But the MENA region is extremely well positioned from a steel-based industry to decarbonize, because there is a lot of DRI and HPI that installation that are ready to take low carbon hydrogen. And when you look also at the exposure to the CBAM of UAE for aluminium and all these metals, there is a strong, I would say, strong incentive to not lose the money at the border, but export low carbon product. Then that's I would say the low-hanging fruit from decarbonization, but the region is very, I would say, innovative in terms of looking at different solutions. And I think there are, I think Nicolas will be able to speak about it, but I remember seeing during COP28 some hydrogen vehicles that were also being tested. So there is a lot of, I would say, opportunities to either from city health being decarbonization objective, but the many very hard to abate, sorry, Mr. Malik, but the high, very energy intensive company that are going to be quite difficult to decarbonize, you know, when electricity ends, are option with the glass manufacturing, for example, in Ras Al Khaimah, or with hydrogen in the coming future. But in the short term, it's clear that all the large-scale projects that even I've been taking an FID again, like I was mentioning in my presentation, are export-oriented in the short term. So
yes, passing to Nicolas and Mr. Malik for your kind address. So the first question is really about where the demand comes from, because export market is more like a decade-long marathon, and there are a lot of uncertainties of the microenvironment, and some would suggest that we focus on the local economy, on the local hydrogen hubs, that perhaps we can first build up the scale and then expand, and then look for expanding opportunities. And to both of you, what kind of opportunities do you see from the MENA region locally? And what do you foresee is the average scale of the projects that could be happening in MENA soon?
Well, if I try to answer its multiple questions, I fully agree with what Claude just said. If you remember one of the maps we saw, it's true, some countries have no choice. They would like to have a space on the global energy markets because they have sun and wind. So it's like Mauritania, it's like Namibia and those countries, and they don't have a base to have a dual model, so they have to bet on the energy exports. So these countries, the way they look at export is different from the GCC, because in GCC, you can do both. You can leverage on decarbonizing your industry, or bringing industries like we just saw Indian steel or China steel coming here to be decarbonized and exported to Europe. And then you have the pure local industry diversification. So I think what's really seems exciting to me is to go back to what this region has been saying for already a few years. They don't want only to depend on oil and gas as an economic balance. I'm not even speaking about the climate. So all the countries in the region have a plan to diversify, right? And not only to services, but also to other type of industries. So who knows? We see for example, the electronics industry, the manufacturing start to be more global. If they come to GCC, again, they need hydrogen. They could have access to low carbon power. So the people making chips for Samsung, Apple device or whatever, if they do it here on low carbon, it's easier for them than to do it in Taiwan when the options on low carbon are much more difficult for power. So you could see different ways for GCC to attract investors, because I think to me, that's really the key if I compare to other countries I operated. First, to diversify beyond the big energy player, the big oil and gas, either the local ones, which are global, and the big international ones. But further, steel is an example, to bring other manufacturers here, because they got infrastructure, they got clean energy and so on. I think it will be everything together. And that's the plan of the GCC. Education, infrastructure, supply chain, hydrogen will have a space there. I think you need both. I think if you only bet on export, then other countries can do it. I think GCC can try to elaborate more than that, and I think they will do it.
Indeed, hydrogen opens.
Well said, Nicolas. I echo your sentiments on this, right? One lens to use to evaluate this opportunity is exactly what you mentioned, that, the transformation of what you have and what it can be, which is the gray to green, the gray to blue to green, whatever have you, right? But I think an alternate lens is what else can be done, which has traditionally not been done. And what I mean by that is typically energy intensive industries find a very interesting investment option in GCC region, primarily because of this availability of or overabundance or well suitability of renewables. And once you add the combination of renewable plus infrastructure and low cost financing, I think it creates a perfect storm for not only to, number one, transition old ways of doing into new thinking, but also altogether bringing new industries that never found an investment destination in GCC region. And that includes not only heavy industry, that includes data centers, that include, talk about data centers, that's a whole conversation in itself, right? What renewables can do with the AI-driven, data-hungry infrastructure. That includes downstreaming of iron and steel, as Nicolas pointed out, which typically has not happened in a very integrated form. So I think two broad categories of demand centers get created. One is, of course, export, and the other is domestic. But even within domestic, what is exciting is cleaning up, if you will, the older infrastructure into low carbon infrastructure. But also more exciting is just the sheer ability to attract new manufacturing, and thereby GCC to emerge what I call hub of green manufacturing of the future, to be able to then export not the green hydrogen or green hydrogen derivatives, but to export the products and services that would be created out of green hydrogen and green and ammonia and derivatives. So I think that's the future that we're excited about.
And may I ask?
I would like.
Sorry.
I would like just to add on that. I agree. We had a discussion just 1 week ago about this in the region, and I agree. Data centers is very promising to have use of renewable energy resources in the region. There is a real hinder is the legislation in terms of putting the data in the GCC toward Europe and US, but it's another topic. I think that most of the developers and the market is looking to Europe or East of Asia because these are the regions that have improved their regulatory framework to procure green molecules. But I see, as I said during my presentation, the market in the MENA region very, very promising. And if we take the green steel, we have, for example, Morocco that is becoming a huge producer for automotive, cars, and for airplanes. And they need green steel, these companies, and the cost of the green steel doesn't represent a big increase in the cost of the car. So there is a market for that, and we see a lot of industries beginning to position in this field because there is the impact on the final cost of the car is not that important. The other potential is regarding ammonia, because countries like Saudi Arabia, like Morocco, are big producers of fertilizers, and they need to green their fertilizers to be able to avoid CBAM and to export to Europe, for example. So there is a national market regarding ammonia in this region. Last but not least, there is a huge market that is developing also in the region for e-methanol, because chemical industries, mainly in the GCC, are using e-methanol. But also when you see the number of ships that are being ordered, more than 90% dual engine, including e-methanol engine, there is now a positioning in terms of developing low carbon bunkering hubs because of the shipping lines, basically. And it gives also a real promising market in terms of refueling the ships when they stop in all these big ports in the region, be it in Yanbu, Saudi Arabia, Salalah, Oman, Suez Canal, Egypt, or Tangier in Morocco. So I think that the market in the region that we are not really considering for the moment because of the lack of the legislation is going to ramp up, and it will be attracted by the European market.
Thank you very much. And
I'd like to add one more element about the key, I think a key aspect of the MENA region is that assuming that the gigascale hydrogen projects are going to be built, there is a low-hanging fruit, which is to actually localize the plant where the electrolyzer, for example, are going to be built. Whatever using technology licensing from different provider, but this is an opportunity also for the MENA region to take advantage of their, let's say, first take advantage. And I think we discussed the competitiveness of Chinese electrolyzer today, but I'm sure that there are, through this partnership, government to government, some potential way to that the MENA region might look at it, due to the fact that they don't really have any incumbent company in the MENA. So it's an opportunity for them, to build more value out of the hydrogen value chain.
thank you very much. The time is up running. So to conclude, I would like to ask the last two questions to the group. First question is regarding the clean fuels, the low carbon fuels, especially in aviation and maritime. There are a hype regarding the SAF and methanol. So I want to ask Ms. Claude and Mr. Ali, what is your take on the clean fuels market? Do you foresee a near-term timeline for these projects to take off the ground? And also another question to Mr. Malik and also to Mr. Nicolas would be regarding project FIDs. If you can give one advice for the industry to push projects for FID, what would be your advice?
So dealing with the very strong interest of e-fuels, or not necessarily e-fuels, but let's say sustainable aviation fuel, which have been driven by the RefuelEU and target. We need to, there is a pessimistic and optimistic. The pessimistic will speak about the projects that have been delayed or cancelled recently on this topic, which were projects that ultimately they were expecting off-takers, and the off-takers finally did not materialize, or they were surprised by the final cost. And there is an optimistic view, which is that it will be a demand for sure for these fuels. So the one who will be able to provide it will probably reach quite a high price for this fuel. So it's pretty much egg and chicken, and the one who can actually take the risk to be ready at the right time to provide, of course, on a long-term agreement, but potentially also address the merchant market.
And Mr. Ali, you want to chime in?
Yeah, I think it's the most important question. What are the markets that in e-fuel that will ramp up first? If you look at, so for me, the market is huge and it will be bigger than that. But the demand is very tiny, it's very little because of the gap of price between gray and green. So we see first movers mainly in the shipping industry more than the airlines that are looking for e-methanol. but with very small quantities in order to not increase their costs, because the incentives are not there to reduce the gap between gray and green. And I see later on the airline markets coming, but it will all depend on what are the costs of carbon that will be applied and what's the fine that will be put, the tax that will be put in the game. IMO has not frozen its legislation yet, and it will depend on that. So I see first the shipping market and then the airline market a little bit later. But anyhow, no project could reach FID if you don't have the offtake and if you don't have many off-takers supporting one project.
Thank you. And regarding project FID, Mr. Nicolas, you want to go first, or Ms. Malik?
Well, sure. I think it's been a hot topic. You know, we've seen waves. A couple of years ago, everybody was super optimistic to see so many MOUs, so many giga projects everywhere. Then you had a wave because some of these projects either they were not funded, they didn't have a taker, or the way subsidies change. So you had a wave of projects being cancelled or frozen or postponed. And again, I think we have to get away from probably the world of the media, which are looking for extreme cycles. And again, I'd like to call for balance between optimism and pessimism. I think the right projects are going on. We can see that. I think it's still not yet clear which projects are the ones that are really going to be replicated. Because again, the way the US is doing it, Europe, China, Japan, or the Middle East are different ways. Some are pushing on subsidies on regulation and so on. So that's probably the difficulty if I compare to other young industry, is that we don't have yet a global model that is going to be replicated. So it's normal that we all have those questions. It's perfect to me. It's technology, it's capital, it's customers and offtake. To us, what's important is to make sure each of us know our value in a system. Some of us provide technology, some of us provide funds, some of us provide regulation. As soon as you start confusing that, then you take a risk of taking the wrong decision and you end up after a few years with the wrong project. So I can see some projects moving on at the moment. Obviously, with the IRA in the US, that's put a lot of pressure on other parts of the world, but that's also going to evolve. So I think what's important is to always understand who are the customers, what's the value creation, what's the off-taker, like we discussed today. It's business like any other business. At the end of the day, you need a customer.
Thank you. And the last but not least, Ms. Malik, one advice.
I think most of it is fairly covered. If I take a very broad view of where we stand, we're trying to all solve I think, an unprecedented problem in front of us, which is the larger climate change, by using very new or unique levers, right? Low carbon hydrogen and few other interesting levers. So it is very unnatural to believe that the tools of the past will still be directly applicable to such an unprecedented situation. So my one piece of advice would be to be very, very innovative as these projects are getting structured. If you look at the conventional thinking of how project finance is done, how fundamentally the banking community understands project risk, prices project risk, how the conventional offtake community only plays a role of an off-taker. I think, in my opinion, those are sort of tools of the past. Very new thinking has to come in so that how off-takers can help participate, reduce the project risk for the lending community. How the lending community can move beyond and offer very interesting, innovative ways of financing to price that risk, which initially would be there, but as the project sort of develops and of course gets into operational stage, that risk only reduces. So tools of the past will not, they've gotten us here where we are, but I don't think those are the ones that will get us to where we need to get to. So I think innovation is the name of the game for the financiers, for the project developers, for the regulators, policy setters, as well as the off-takers, right? We need to break down conventional silos between all these stakeholders and make projects happen. And that's the larger approach we are adopting as well.
Thank you very much. And thank you once again for the great sharing to our great panelists. As much as I'd love to continue, our time today is coming to an end. And I want to extend once again my gratitude to our speakers for their invaluable insights and to our audience for your engagement and contribution. Please note that this webinar has been recorded and will be available online in the coming days, along with a summary of key takeaways. If you have any other questions, please feel free to reach me out at molly@leaderassociates.com.
Thank you very much. Pleasure to meet everyone. Thank you, Molly.
Thank you. And
Thank you.
Thank you, Mourey. Thank you
yeah,
all.
please remember that this webinar is part of the digital content for our upcoming in-person event, Connecting Hydrogen MENA 2025, which is the region's premier hydrogen gathering taking place from February the 24th to 26th, 2025 in Dubai, UAE. And we look forward to continue this discussion in person. Finally, thank you all for your participation. Please stay connected. Thank you very much.